Welcome back to the channel. Today we're diving into how to borrow your way to wealth. Before you think this is about maxing out your credit cards, let me be clear. We're talking about sophisticated financial strategies that wealthy individuals and businesses use to accelerate their financial growth. This video is based on research from authoritative sources including the Federal Reserve, NerdWallet, Bankrate, Interactive Brokers, Fidelity, Charles Schwab, FINRA, and the U.S. Small Business Administration using current rate data as of July 2025. We'll explore legitimate borrowing strategies that can help you build wealth faster while potentially reducing your tax burden. The key word is strategically. We're exploring how the wealthy use leverage to multiply returns, access capital efficiently, and optimize their financial position. Strategic borrowing involves using borrowed capital to generate returns that exceed the cost of borrowing, while maintaining proper risk management and clear repayment strategies. One of the most powerful wealth-building strategies is borrowing against business equity. According to the Federal Reserve data, business loan rates range from between 6.6% to 11.5% at traditional banks, with SBA loans offering some of the most attractive rates available. Business equity loans allow you to access capital based on the value you've built without giving up ownership. This is particularly powerful for business owners who need capital for expansion, real estate investment, or other wealth-building opportunities. SBA 7A loans can provide up to $5 million with rates typically ranging from 11.5% to 15%. These can be used for working capital, real estate purchases, equipment, or even business expansion. What makes business borrowing particularly attractive are the tax benefits. Business loan interest is typically tax-deductible, effectively reducing your borrowing costs. If you're in a 25% tax bracket, a 10% business loan effectively costs you 7.5% after taxes. SB 8504 loans offer another compelling option for commercial real estate, where you can acquire property for just 10% down. The SBA guarantees 40%, a bank provides 50%, and you contribute 10%. This leverage can dramatically accelerate real estate wealth building, allowing you to control $1 million in commercial real estate with just $100,000 of your own capital. For existing business owners, equipment financing and working capital lines of credit provide flexible access to capital. Business lines of credit currently average between 6.5% and 7.9%, depending on whether you choose fixed or variable rates. The strategic advantage extends beyond favorable rates. Business debt helps establish business credit separate from your personal credit profile, allowing access to larger amounts of capital over time while protecting personal credit utilization ratios. Your home represents more than a shelter. It's a potential wealth-building tool through strategic equity borrowing. Home equity lines of credit, HELOCs, currently offer some of the most attractive borrowing rates available, with average rates around 8.27% as of July 2025. American homeowners are sitting on over $34 trillion in home equity, with the average home equity amount at $313,000, representing massive untapped resources for wealth building that most homeowners never fully utilize. Home equity lines of credit allow you to borrow up to 85% of your home's value minus your existing mortgage balance. You only pay interest on what you actually borrow, and many lenders offer introductory rates as low as 6.49% for qualified borrowers. Real estate investors frequently use home equity lines of credit for down payments on investment properties, leveraging their primary residence equity to acquire cash-flowing assets. If you can acquire a rental property generating 10% annual returns while borrowing 8%, you're earning a 2% spread on borrowed money, classic wealth-building leverage. The tax advantages add another powerful benefit layer. Interest paid on HELOC funds used for substantial home improvements is tax deductible. Additionally, in certain circumstances, interest on funds used for investment purposes may also qualify for deductions, though this requires consultation with a tax professional. Beyond real estate, HELOCs can provide capital for business investments, stock market opportunities during downturns, or debt consolidation to eliminate high-interest credit card debt. The flexibility and relatively low cost make HELOCs one of the most versatile wealth-building tools available. Perhaps the most sophisticated borrowing tool available is the Securities-backed line of credit, or SBLOC. This strategy allows you to borrow against your investment portfolio without selling securities, typically at rates lower than traditional loans. SBLOCs allow you to access 50 to 95% of your portfolio value as a line of credit, with rates often tied to the Secured Overnight Financing Rate, or SOFR, plus a small spread. The beauty lies in their flexibility and tax efficiency. Unlike selling securities, which triggers capital gains taxes, borrowing against your portfolio allows you to access liquidity while maintaining investment positions and their growth potential. You continue to receive all dividends and benefits from appreciation while using borrowed funds for other wealth-building opportunities. Major financial institutions offer SBLOC programs, typically requiring a portfolio value of about $100,000 or more. Borrowing capacity depends on portfolio composition. Cash and Treasury securities may qualify for 90 to 95% borrowing capacity, while stocks and ETFs might qualify for 60 to 70%. SBLOCs offer several strategic advantages. Typically, no application fees, origination fees, or prepayment penalties, quick access to funds, often within a week, and you only pay interest on what you actually borrow. Since you're borrowing rather than selling, you defer capital gains taxes indefinitely. The tax implications can be particularly favorable. Depending on how you use the SBLOC proceeds, the interest payments may qualify for tax deductions, though this requires careful tax planning with a professional. For investors comfortable with higher risk, margin trading offers another wealth acceleration avenue. Current margin rates range from as low as 0.75% at Interactive brokers to around 11.325% at traditional brokers, depending on balance, size, and broker. Margin trading allows you to borrow up to 50% of your security value to purchase additional investments. The key to successful margin investing is understanding the mathematics. If you consistently generate returns exceeding your margin interest rate, you can accelerate wealth building significantly. Some brokers offer competitive rates. Robinhood Gold provides the first $1,000 of margin at no additional interest beyond their monthly fee, with additional borrowing at 3% annually. M1 Finance offers rates as low as 2.25% for Plus members, making it one of the most cost-effective margin borrowing options available. Strategic applications extend beyond simple portfolio leverage. Experienced investors use margin trading to capture time-sensitive opportunities, manage cash flow timing, or maintain positions during temporary liquidity needs without forcing portfolio liquidations at poor times. One of the most powerful aspects of strategic borrowing is tax optimization potential. Business interest expenses are generally fully tax deductible, effectively reducing your borrowing cost by your marginal tax rate. Investment interest may be deductible against investment income, subject to certain limitations. The concept of tax arbitrage becomes particularly powerful for high earners. If you can borrow at 8% and deduct interest at a 35% tax rate, your effective borrowing cost drops to 5.2%. If your investments generate returns above this rate, you're building wealth with tax-advantaged borrowed money. Estate planning strategies also benefit from strategic borrowing. Advantaged techniques like grantor trust or family-limited partnerships can use borrowing to transfer wealth to future generations while minimizing tax consequences. For those with substantial assets, more sophisticated strategies become available. Private banking relationships often provide access to lower rates and more flexible terms than standard products. Asset-based lending against art, collectibles, or alternative investments can provide liquidity without selling appreciated assets. These specialized loans typically require significant net worth, but offer unique tax and estate planning advantages. Cross-collateralization strategies allow investors to use multiple asset types as collateral, potentially accessing higher borrowing limits at better rates. This might involve combining real estate equity, investment portfolios, and business assets to create comprehensive credit facilities. While strategic borrowing can accelerate wealth building, proper risk management is essential. Never borrow more than you can comfortably service from regular income, even if investments underperform. Maintain adequate cash reserves, typically 6 to 12 months of expenses when using leverage. Diversification becomes exponentially more important when using leverage. Concentrated positions amplify both gains and losses, so ensure borrowing doesn't create excessive concentration risks. Interest rate risk is another key consideration, as many strategies involve variable rates. Credit line management is crucial for maintaining access to capital. Keep credit utilization reasonable, make payments on time, and maintain strong lender relationships. Your borrowing capacity can become a valuable asset itself. A conservative rule of thumb is keeping total borrowing below 25 to 30% of your net worth to maintain financial flexibility. Consider a business owner using an SBA loan to purchase commercial real estate. The 10% down payment requirement means controlling a $1 million property with $100,000 invested. If the property appreciates 5% annually, that's $50,000 in gains on a $100,000 investment, a 50% return. A homeowner with $200,000 in home equity might use an HELOC to purchase rental property. If the rental generates 8% annual returns, while the HELOC costs 7%, they're earning 1% on borrowed money, building long-term wealth through appreciation and cash flow. An investor with a $500,000 portfolio might use an SBLOC to access $250,000 for a business opportunity, generating 15% returns. While paying 6% on borrowed funds, they net 9% returns on capital they wouldn't otherwise have. Start by assessing your current financial position and identifying wealth-building opportunities that could benefit from leverage. Calculate potential returns and ensure they exceed borrowing costs by a comfortable margin. Begin with lower-risk strategies like HELOCs or business loans before moving to sophisticated tools like SBLOCs or margin trading. Build experience and comfort level gradually. Work with qualified professionals, tax advisors, financial planners, and estate attorneys to ensure your borrowing strategies align with your overall financial plan and tax situation. They can help structure strategies to maximize benefits while minimizing risks. Monitor your leverage ratio carefully and have contingency plans for different market scenarios. Regular reviews ensure your strategies remain appropriate as your financial situation evolves. Strategic borrowing isn't about taking on debt. It's about using financial tools to accelerate wealth building while managing risk appropriately. The wealthy understand that properly structured debt can be a powerful ally in building long-term financial success. Begin by exploring borrowing options available based on your current situation. If you own a business, investigate SBA loan programs. If you have substantial home equity, research HELOC options. If you have a significant investment portfolio, explore SBLOC opportunities. Remember that all borrowing involves risk, and these strategies aren't suitable for everyone. Never borrow money you can't afford to lose, and always ensure you have adequate cash reserves for unexpected situations. The goal isn't to maximize leverage, it's to optimize your financial position using all available tools. Strategic borrowing, when used wisely, can help you achieve wealth-building goals years faster than relying on savings alone. Start with small steps. Educate yourself continuously and work with qualified professionals. The tools are available. The question is whether you'll use them to your advantage. Thanks for watching. If you found this valuable, please like and subscribe for more advanced financial strategies. Comment below about which borrowing strategy interests you most, and I'll see you in the next video.